Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Monday, January 10th. Geez, what a day that was for the market. Let's go over the price action. Actually, I have to change this around. So this is this is actually how it looked from earlier today, and I will refresh this. It is interesting because I gave, as always, our midday videos, and at that time, at around 12 today, things were really looking not very good. And, we had another gap down this morning or weak move going into the open. And then we continued to do what we kind of did last week, which was move lower. So very, very strong rebound for a couple names. And, I'll go through some levels, but, we would obviously love to see a little bit of follow through. I think hammer bars are going to be what you see all over the place. You're going to hear me talk a lot about VPOCs in this version point of controls because I saw them being taken out all over the place. But we'll go through these numbers. Sorry to be a little bit unorganized, but I thought I had refreshed this already. And then a nice move in bonds today too, which, I had said that we were kind of ripe for a bounce, and we just kept on drifting lower and lower in the bonds. Let me talk about the bonds first today, because, again, I think that really has to do a lot with one of the factors that's been going on, right? So finally, we got a little bit of you can almost say a hammer bar there too, with 30-year bond futures moving up 40 basis points. Again, why is this important, right? Well, bond prices are going down here and yields are going higher, right? So the higher and higher yields go, the more valuation comes into play, just to keep it really simple without going into a major tangent there. But the RSI was about a 24 at one point today, because the bond futures were down again today, which means, yields were higher. But I would love to see a little bit of a follow through. The more that these can bounce, right? The long bonds that we're looking at. Again, we're not talking about short-term rates and what the Fed is doing. We're talking about the long-term bond yields. And if they can bounce another day or two, I think that would be great for some more riskier, type equities out there. So that's the first thing that I wanted to cover. Let's talk about the where the S&P finished for the day, right back at the 50-day moving average, which is where we closed on Friday. So, if you bought the dip a little bit, this was one day that it worked, right? Depending on where you did it, or if you waited for a reversal for price to get a little bit better, you were rewarded by that. I did note that, which was very discouraging till about 1 o'clock today, till about 12 o'clock today. But I was looking at this version point of control that I said, hey, I think this has to be taken out. We started the day right in here, and I said, hey, we might as well take this thing out, right? So these are nice because we can often see reversals off of these. Take a look at the one that was taken out over here. Now, again, it wasn't perfect. We didn't turn on a dime, but it was one of those things that had to be taken out. And then once it was, we went a little bit lower, and then we had a nice V recovery. So would love to see that. We're going to have to get through some resistance if we do get there, which is going to be 46.93, right? And you could look at the last time that this happened too, right? Went a little bit lower and had to fight with that bottom of value for a bit. And then just managed to continue to go higher. So I thought that was key. And if we go back again to this weekly, to the daily chart, a move back above the 50-day moving average would be a wonderful thing, I think, to see for tomorrow from a technical basis. NASDAQ, we know that's been weaker this year. It was down about 4.5% for the week last week. Well, you got a really nice, again, we're going to hear me say this a lot, hammer bar, where you've got a really small body in the candle, but really long wick. Again, version point of control taken out. We went lower. But again, taking out some of these things, you're going to see one taken out here on the 1 hour bar as well too, right? So again, they're kind of things that I like to see that are taken out, right? You could see a couple of them back in here. Here was a reversal off of this one, right? And we went higher. No reversal off of this one, but this is good. I think this is one of those things for me that had to take place. And we'll see if we can build off of this tomorrow. Again, I think interest rates are going to be a factor in that. Russell futures, they came back too a little bit. Still, I think this is a very difficult chart, below the 200-day moving average, but staying inside value, hanging on by a thread there is was the Russell. I mentioned I had here sorted as I just sorted this, that the best sectors over the day was software. So finally, a very, very weak area the last couple of weeks. You could see also really nice move here. I don't know if that really gets you anywhere in terms of, reclaiming technical levels, but maybe we can kind of build off of this, right? And again, you don't have to own the ETF. You can go through some individual names. I thought a couple other areas were interesting. This was a trade that we put on Friday that I thought was ripe for a reversal. Notice you have this downtrend line coming in here and kind of a nice bounce off of this, and a real nice bar for the XLV ETF. After multiple days of going down, I thought that this was ripe for a rebound. Again, this morning it wasn't looking that great because it was down with everything else, but buyers did appear to come back into this. Nice volume today on that move. Bristol Myers stole the show. This was actually a name that I mentioned in the weekend video on our watch list. It was probably the best performer on that watch list today, up 3.6% today. Big move out of this little consolidation. And maybe you see move back to 67.25. Again, kind of fits the mold of what we've been seeing lately. Cheap names rally very well. So that was strong. And then a couple other names just to highlight that may not be on your radar, but Becton Dickinson, which is a medical device company, did take out this version point of control sorry, this was taken out back on 12/17, but looking at the weekly chart, I actually really like this chart. Sideways. Maybe at this point, you could see that the RSI has been improving, and maybe we start to see this thing kind of get back out to maybe 266. It's about $7 higher. I did see another version point of control up here around 268. So 268 could be something to shoot for. Pretty sideways looking chart. But trying to resolve its way higher. I did not take a trade in that. I did take a trade in ISRG. This was a name that got back to 52-week highs. This was 367 and then dropped about 50 points. And I like where it's at. It's got earnings soon, so this is be a short-term swing trade for me. But it did hold the bottom of value 319, bounced off of that, and maybe we get a move back in, back up to around 335 to 338, which is kind of what I'm looking for. Right, would like to see that bounce continue there. The cyber names had a huge day today. Right, Zscaler got an upgrade this morning. Very nice move by Zscaler from the lows. This name was up 5.4% after going lower. ServiceNow was one name that we saw a big block of calls that went up. Again, still not the best looking chart here, but managed to go green. But we saw on Friday, huge block of calls that looked to be centered around earnings. So kind of put the name on the radar for me to watch. Fortinet was another name too that caught my attention. Some of these cyber names, this one in particular is up 3%, so very, very strong there. And then the cheaper ones in this space, Cisco. If you covered up the symbol, you probably would think, hey, that's a pretty decent setup, right? Real nice swing higher, checking back to the top of value. And bouncing where it should, right on the 20-day moving average and the top of value. Oracle was another name that we talked about last week that had a decent decline after that announcement merger with Cerner, but I thought this was a logical place where this could bounce too. NVIDIA, AMD, those names bounced nicely too. So you got hammer bars in there too. Again, these were not looking very good charts coming into today, and especially earlier today. It looks like these things are breaking down. That may still happen, but we may see a little bit more of a bounce before them. But these charts are suspect to me. AMD is another one, real nice hammer bar today. You're gonna come across some resistance at 135. Crowd was another one too. Again, not a great looking. How many times have I said that in this video? Not a great looking overall chart pattern here. Broken consolidation, broke lower again. But for a very quick trade, maybe has a little bit of follow through from today's price action. They were buying some calls at the end of the day in this one. All right, and that's pretty much it to go over for today. I'm going to be going over a lot more charts tonight, but I think that's the main question is whether we're going to see a little bit of some follow through after today. I think that would be really great to see. I can't remember a year that started off like this, right? Where you've had, things like this was down, by the way, 15% at one point today, and the Qs, down, about what, 6.5% at one point today for the year, which I can't remember the Qs getting off to that bad of a start like in the last 10 years. So we'll see if this can kind of get things to, possibly turn things around a little bit. Also, right, and it could be today there was a little bit of short covering too, which was part of could be part of what happened. But I would be paying attention. We've got a couple big reports this week. I think Powell speaks. Also on Wednesday, we get the CPI reports. Everybody's going to be watching that one. Again, I don't know why that the expectations are so low, 0.4, when we had 0.8 last month, but we'll see how it turns out. I'm, again, very surprised at the way that the survey number is only 0.4. And then you get the PPI report, which is another gauge of inflation the day after. All right, guys, so we'll leave it there for the night. Again, great price action from the lows. It did not look like today was going very well. But at some point, you knew that eventually some buyers were going to come in, as well as some short covering. Here's how I traded today. I did add some Oracle, and then just day traded a lot of things. Day traded some Facebook, day traded some NVIDIA, mentioned ISRG. So, again, trying to not get myself into too much trouble. My first week of this year was very painful. I made some mistakes I haven't made in years. So that's, sometimes you need that as a slap in the face to tell you what that you really should not be doing things that you learned not to do years and years ago. But that's sometimes what happens, and it's a wake-up call. All right, so I'm glad that it did happen to me in terms of the first week of the year. I have plenty of time to kind of get over that, but I had some really stupid mistakes last week. If that happens to you, right, where you just are doing stupid things, get up from your computer and walk away, and don't compound the error. Trading is so much investor psychology that we can make mistakes, and those mistakes can compound, right? That's really the situation that we don't want to get ourselves in. And you have to realize that we're all susceptible to those types of things. So I'll leave it there for today's video. Have a great night, everybody, and see you tomorrow.